Hey, Think Realty, thanks so much for joining us today, being a part of the podcast. I'm Eddie Wilson. I started Think Realty in 2013 as a third-generation real estate investor just to bring content and information to you that you wouldn't necessarily receive from Yahoo News or CNBC or any of the other great outlets out there, because I wanted to be specific to helping you on a real estate investing journey. In real estate investing, it's not just about buying the deal. It's about structuring the deal. It's about how you set up your finances. It's all of those things that also pertain to real estate investing. So today we've got a great guest that I'm going to bring on in just a second. But first I want to say thank you to our podcast sponsor, which is CB3 Financial. CB3 Financial is a great company. And if you need a lender, I would highly recommend them because they would love to be your partner in the lending practice of real estate. These guys are experts when it comes to refis or fix and flip or buy and hold. And you can go to cb3financial.com/Think Realty, and you can support them and make sure that you support them for supporting us on the podcast today. Today on the podcast, we've got Tom Laune, good friend, also a business partner, I guess, as well.
Yep.
I guess we own an asset together.
Yes.
And you have also written a policy for me.
Yeah.
So I'm a client of yours. We're business partners together, and you're a sponsor of Think Realty. So it kind of goes everywhere.
Yeah, I love it. It's great.
Appreciate it. You know, the person that's listening or watching today, many of them, I'll just kind of describe the listener, right?
Yes.
The listener and viewer, I would say 60 to 70% of them are high W-2 earners that also invest in real estate. They've got 1, 2, 3, 5 rental properties.
Yep.
There are a few that are kind of dipping their toe in the water trying to figure out real estate investing. And then you've got kind of the top 20%, and they're the ones that own the apartment complexes like me. They're doing lots of crazy stuff. And for me, one of the greatest vehicles that I've ever built for generational wealth, as well as a lot of other benefits, is this concept of infinite banking, using whole life policies as a vehicle to invest in real estate. And that's what you do.
Yep.
And you specialize in it.
Yep.
And all things related to it. And you've got your Bulletproof Wealth system, teach investors all over the nation how to do this properly. Do you mind, just as kind of a jumping in, as just to give us a 30,000-foot view of what using a vehicle like life insurance looks like in order to invest in real estate?
Absolutely, Eddie. So the thing is with this vehicle is that it's very similar. I talk to most of the people about it to help them relate to it. It's similar to a home equity line of credit.
Sure.
Basically you have an asset that you pledge as collateral and you're able to borrow against it. So with a home equity line of credit, you're borrowing against the equity in your home, and that's cool. You could take a loan from a home equity line of credit and put it into say a single family house and use that as a down payment.
Sure.
There are some negatives with that. Some of the big ones are that it actually hurts your debt to income ratio when you do that. That's gonna impact your credit score negatively. Another thing that is going to happen is that line of credit is going to stay the same.
Sure.
For virtually ever. It's not going to grow because you're not participating in the ownership of the bank who lent you that line of credit. So it's just one of those things where there's a lot of advantages to creating a line of credit in life insurance, and it works very, very similar to a home equity line of credit, and it does have a lot of advantages. Some of the big ones are that it grows no matter what. So you're always compounding your wealth, and you're creating an uninterrupted compound growth on your policy's cash value. So it builds equity, and the equity is able to be collateralized, and you're able to put it into your real estate investment. So I love it. I love teaching people about it because it helps really get people in the mindset of thinking like a bank.
Sure.
And a bank is using interest rate arbitrage really to grow and make really amazing returns on their capital.
Sure.
And that's what I'm teaching the average real estate investor to do.
Yeah, that's awesome. In my family, we actually call it our family bank, right? Because essentially that's what it is. It's it's the bank that we've created that we can borrow from, we can pay back into. It is a great vehicle, and let me tell you one quick story.
Sure.
So I took a home equity line of credit on an asset, and the bank every year wants to do some sort of a rudimentary audit on my financials. They want to know how much debt I've taken on, how many new assets I've bought, so on and so forth. And 2 years ago, I had this line of credit that I was using to invest with, right? They looked at my whole entire kind of portfolio, and they called my line of credit, right? Like they were like, nope, sorry, your line of credit is done. Whatever you've used, you can begin to pay off, but no more can you use this line of credit. I didn't realize a bank could call a line of credit like that and make it go away like that. And that to me is one of the huge things that my life insurance policies, they can never do that, right?
No.
Like they can't look at my whole entire financial outlook and go, I don't like the risk we're taking with you. As a matter of fact, we're not going to take any more, right? Like,
Yes.
which to me showed me why I should be going even deeper into this methodology of investing.
Yeah, it's amazing. I mean, a lot of people don't realize this, but back in the financial crisis when the home values went down dramatically in 08 and 09, people's home equity lines were getting called left and right.
Sure.
Because they were underwater on the collateralization. And so banks just don't like to be underwater,
No,
right?
right.
But you can't be underwater with this strategy. You just cannot do it.
Yeah.
And the reason is because, for one, banks consider it a tier 1 capital asset, so they love it.
Right.
And it's always going to go up in value. It just cannot go down.
Right.
It's got a guaranteed component to it.
Then the guaranteed component is death, right?
Yeah.
Like it's and death and taxes, right? Like
Yes.
it's like what we all have
Can't
to
get
face.
away from that.
Yeah. So it's true, and there's such a science to it, right? And it's a predictable science, right? Like
Yeah.
they know the realm of liability that those policies have, and so they're willing to extend loans on those policies as collateral.
Yes.
And that's what I love, is that it's a great vehicle for that. So who in the audience does this make sense for, right?
Yeah.
Is it everyone? Is it just the young? Is it just the old? Is it just the people that have something to leverage? Like who should consider this?
That's a great question. And really the way I look at it is that you have to be in marginally good health, right? Because it is life insurance. So you have to qualify for a physical standard to be able to get it.
Right.
And number 2, you really need to be planning on making some sort of an income of some type for at least the next 7 years. So the way that I say it, if you're 65 and you're planning on retiring in 2 years, this strategy is probably not good because you have to have time to capitalize it.
Sure.
So if you were 60 and you're planning on working to 68, yes, this would still work for you because it's a 7-year minimum run.
Right.
Most of my clients are in the mid 40s to mid 50s range, but I have some clients as low as in their 20s.
Sure.
And obviously on the young side, one of the things I do are 529 alternative plans for young children. So the parents want to start saving money in a way that they can use it for whatever they want to when the kid gets older, when their child gets older. So I have policies on 1-week-old children. So I can do it on a variety. You're never too young, but you do get a little bit too old. So, and then the way you want to look at it is, do you have some extra capital each year that you're wanting to set aside? One of the things that I love is that it creates a target or a goal for you to shoot for savings. So if you have a policy premium, for example, that is you're going to be allowed to put in January 1st of each year, then you kind of know, okay, I'm going to be saving for that, and then it gives you this target to shoot for. And that's something I personally have 10 of these policies now, and it gives me a really good way to structure my savings goals.
Sure.
It helps dramatically.
That's amazing.
Yeah.
And the great part is and then you still have access to the money, right?
Yes.
Like, and that's the best part. Is
Yes.
what people don't realize oftentimes is like, this is one of the best savings account you're ever going to have. You save it, you have access to it, it's always growing, you're borrowing against it, you're putting into investment opportunities that then they're yielding and they're growing, and then it's paying back. It's just this compounding thing. I always say that when I learned to do this, I began to make money twice on my money, right? Like I've always made money once on my money through investing, right? Like I've always been I'm a 3rd generation real estate investor. When I learned to do this, I began to make money twice, right? It's like I made money on the policy itself, and to make money on the actual use of the capital in other assets, right?
Totally.
And it's amazing, man. It's like, where else can you use it? The other thing I love about it is the asset protection side. You know, it's like for someone like me who's got lots of businesses and lots of real estate, and with all of those things come liability, right? Like, and I've got, I've up in, in my highest days, I had thousands of employees, right? Like, and now that I've got thousands of doors, I've got thousands of tenants, right? It's like, and all of those are liabilities. As much as you want to think everybody's great and everybody's amazing, it's like, I still, without ever desiring to ever do anyone wrong and live life perfectly, could still put myself into a place of liability.
Yes.
What I love is that the one thing that's never been breached, there have been veils that have been pierced, there have been assets that have been taken, there have been personal assets. They say your personal assets are never, it's like, no, all of that's been taken, right? But life insurance, never.
Yes.
Never one time.
So the thing with the asset protection is it's regulated because life insurance is regulated on the state level. Every state has a slightly different amount. I will say that we're sitting here right now in Arizona and it's 100%. Florida, where you're at, is 100%. I live in Tennessee, 100%. Texas, 100%, Utah, 100%. There's a lot of states that I do a lot of business in. There's a few of them out there that have less than 100%, but it's just part of the conversation on where you live depends on the asset protection level.
Yeah.
But
so this pretty is applicable from birth till a reasonable, age.
Yeah.
And let me ask you this: like, I know I have a policy with you.
Yes.
And do you have policies? You said you've got 10 policies.
I have 10, so I have
And then
one.
how do you use them?
That's a great question, Eddie. So I have one on my business partner. So you can have a key man or a business partner policy. And I have one like that. And I have several on all my family members and myself, multiple ones on myself. Because as I've earned more income over the years, I've created additional policies.
Right.
Because I want to be able to put in as much as I can through them. And what I'm using them for is for sure real estate. I have a joint venture on a mobile, it's actually a self-storage facility.
Okay.
And it's been great. It's just kicking off monthly income, which I absolutely love, that asset class. It's a really good one. And then I also use it for just a wide variety of alternative investments. Like I really like the ATM space. They are a really good place to just kick off
a lot of tax
investments.
benefits in it as well. Yeah.
I recently became a partner in a company that does like data mining and cryptocurrency mining, all that kind of thing. So I'm kind of excited about that space as well. And I've been learning a lot about it. But yeah, it has been something that the more that I learn about it and do it, the more I want to do. And I think that is a common theme with a lot of my clients is that they see how powerful it is. And they're like, okay, I'm ready to up the ante on it. So they usually do that.
I say the same thing. I get asked a lot, and sometimes it's hard to describe it. And it's hard to help somebody understand all of it. And what I oftentimes recommend is like, hey, call a Tom and talk to Tom, and then have you run the numbers on it, right? Because you'll easily kind of like run the numbers, show over a certain period of years, this is what it looks like. And you don't have to jump in at $100,000 a year policy. You can jump in at 5 or 10, right? Like whatever you believe that you can safely save. And now you've got this investment capital that you can easily start earmarking for other investments. And so I think that every person, bar none, should be looking at this because it's an amazing vehicle. Like it has helped me with my family. Like it's just a great vehicle. I can't speak enough about it. And so you said real estate. Are there any other just investment strategies you've seen that have worked well?
So small business owners, it works really well for. In fact, I just flew out here today and I was talking to a young man who has a cleaning company where he goes into commercial buildings and he has to buy a lot of equipment for that. And this, I was explaining to him, he asked me what I did, and I was like, oh yeah, I'll explain it to you. And he's like, wow, this would really work well for financing my equipment purchases so that I can have my money really working at two places at once and be able to do these really low interest rate loans, because right now that they're not really lending on that stuff for him. He's having to just save up and then buy another one and then save up. I think he said each one of his cleaning setups is $60,000. So it really does work good for entrepreneurs and small business owners as well.
I heard of the most unique one the other day, and I don't know if you've heard this yet. I was talking to a buddy of mine that owns a plane, and I said, getting a plane financed, Andrew and I, we have a plane, and it's the hardest thing in the world to get a plane financed. Like you have to have perfect credit, you have to have a great balance sheet, lots of cash. And at some point, you can almost just go buy the plane cash anyways. It's silly to even get the loan. And so I was talking to this guy, and I said, man, did you go through your finance? He goes, I didn't. He said, I actually bought a life insurance policy. He said, and instead of using my cash, he said, I was going to buy a plane that was this much. And I decided to buy a plane that was this much. and I had enough cash, and I ended up putting it into a policy. He said, my plane is actually financed by my insurance policy. He was like, I financed it myself. And I was like, okay, that's a first for me. That was super unique.
That sounds awesome. Yeah. It's just that kind of thinking, though, once you open your mind up to what you can do with this, the sky's the limit.
Right.
It is really incredible.
Yeah.
So what I do with the Bulletproof Wealth system, I also look at basically, I had a situation, Eddie, where I lost partial hearing and had to get out of my other job that I used to do in the music industry. I was a mix engineer and producer. And I like to protect people's ability to earn a living as well. So I add some other elements for risk mitigation to this, so I don't just focus on creating banking policies for people. I also make sure that they're taken care of from an income replacement perspective and from a disability perspective as well.
That's awesome.
Yeah, so I just try to get a little bit more well-rounded.
That's awesome.
Look at everything. So.
That's great. Well, thank you so much for coming on the show today. We're out of time, but I'd love for you to at least explain how they can get in touch with you, how they can find you, all that good stuff, because I'd highly recommend you trying to find some time with Tom and let Tom kind of explain how this could work into your budget and your life.
Sure. I have a really simple setup. It's just go to bulletproofwealth.info, bulletproofwealth.info. And there's a place there to sign up for free access to videos where you can really learn more about what I teach people. And then on that video page, there's a free sign up things where you can set up a time to talk with me, and I'll go through your whole situation and show you whether or not this makes sense for you.
Sure, wonderful. And I did the same exact thing. Tom set up a policy for me. I think I've got 6 or 7 of them now. And it's been a part of my journey, and I only have one regret. You know what that is? I wish I would have started more. I started earlier, and I wish I would have put in more. It's always the case, And I know you'll feel the exact same way once you get involved. So definitely check out Tom and learn his bulletproof wealth policy or strategy, and I'm sure you'll help him out.
Awesome.
Very good.
Thank you so much, Eddie.
Thanks, Tom. Appreciate it. Think Realty Nation, thanks so much for being a part of the podcast today. I love introducing people like Tom to you. I know Tom's been on the show before, and I would highly, highly encourage you to go follow him, watch his videos. Go to his bulletproofwealth.info and check out the videos. It costs you nothing, but education is everything, right? Education is always the catalyst to success. I look back over my life, and the biggest changes in my life always come from the people I meet or something I've learned. And you can do both by being a part of Tom's world, and I'd highly, highly recommend it. Thanks so much for being a part of the show. Thanks again to CV3 Financial for being our podcast sponsor today. If you need a friend in the lending business, somebody that understands your business needs, that's willing to dive in, that's willing to give you what you need, whether it's fix and flips, or if it's buy and holds, or if you're just doing a refi, they would love to help you at cv3financial.com/Think Realty. Make sure you go pay them a visit and thank them for being our podcast sponsor today. If you haven't already picked up our Think Realty magazine on the shelves of Barnes & Noble, you can go to thinkrealty.com and you can subscribe and get it to your doorstep like I do every single month, because there's great content in there. Thanks so much for being a part of the podcast today. Have a wonderful day.